All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to Friday's edition of premarketinfo.com. I hope all you people didn't stay up too late last night going to see the Hunger. But we're here to prepare you for the first hour. We have a nice S&Ps, Dennis.
Yeah, the range here, Joel. Pretty quiet, though, overall. We've got a range overnight, but we're only down 2.5 here, and we've been quiet for the last hour. So looks like it's going to be a quiet Friday open.
Yeah, just kind of a slow leak here. The market opened up, rallied, low little gap area for you people that don't look at the entire Globex session. Got up to 95 and a quarter and just kind of been selling off since then. If that 13.95 and a quarter holds as the high of the day, that coincides with our target down here at 13.82 and a quarter. That was also Thursday's low. Folks, we take that out, we may have a substantial correction on our hands, maybe go all the way down to 13.50 or something. But keep an eye on that 13.82.50 level. That was yesterday's low. So far, that's our target this morning. The current Globex low is 13.85.50, but that doesn't look like it's going to hold up here. So let's move on to the Big Ten. Let's start with ExxonMobil here, getting a slight bounce in the pre-market. After struggling to stay above 87, here we are back in the 85 handle, 85.33 close, 85.10 low. That is going to be our support. Really don't have any good numbers below that 85.10, Dennis. We should sink into the 84s if that 85.10 does not hold.
Yeah, and then if you look down, we had a couple of lows there, Joel, from about 2 weeks ago at 84.05 and 84.13. So I agree. If we take out this 85, you got a little bit of air down to those couple of lows we had at 84, and even before that in mid-February we had some lows in the 84. So 84 has good support. Just the 85 doesn't have quite as much support as the 84 does. But the commodity stocks have been getting sold off, so I still think rallies to be sold in this whole sector.
Okay, moving on to Apple Computer. Very, very tight range yesterday, Dennis. I mean, we didn't even have a much over a 10-point range. Made a low at 595.53, but was able to recover on the day to settle at 599.34. I think you have to really keep an eye on that close, 599.34, that $600 level. Going to be a major, major swing level today. Stocks looking a little tired here. Below that 595 level, I'm looking for Monday and Tuesday. Right in between there, 590 would be the key number to keep an eye on. And longer term, Dennis, that's still that 578 number. And that's going to be your major, major support.
600 has been acting like a magnet here for the last 2 or 3 days. It can't seem to get away from the 600. It goes up 4 or 5 points, pulls back to the 600, goes down 4 or 5 points, pulls up to the 600. So 600 is like a magnet trade on this. Eventually that magnet's going to give way, and the stock's probably going to start either breaking out to new highs if it breaks up at 609.65, or it's going to start breaking down and make a run for your 578 number, Joel. So hard to say which one this is going to go. It's almost a coin flip, but you got to like the relative strength. The market's been selling off here for the last couple of days, and Apple has held up relatively well.
Okay, IBM is talking about stocks that held up relatively well. IBM update here. We've been talking about that 206 number all week. 205.99 was yesterday's high, so that 206 number will come into play again. Use that as good resistance. Above that, you have another half a point move up to 206.53. To close 549, I'm only seeing a minor support down to the 203.70 level. You have the 6-day low, Tuesday's low, and Thursday's low between 203.70 and
The
203.96.
stock had a lot of relative strength there yesterday, and after hours, just to note, it was trading up pretty significantly after hours. Got up to the high 206s for quite a while on a little bit of volume there too, Joel. There was just a little news that they had something, some contract or something with Facebook. So I don't know if that was what the driver was, or if it was just some people reading a little bit more. Because IBM, I mean, has news every day, but somebody mentions Facebook in the same sense of anything, everybody gets excited. I think that's maybe why it was trading up a little bit there. Just a few people probably getting too excited, but it is to note that it was trading up on some pretty good volume after hours last night. 205.45 though this morning, so it's trading flat right now, but on very muted volume. So just keep an eye on it. Had good relative strength yesterday, a good decent move up last night, but this morning is kind of quiet. So wouldn't surprise me if it started to get some follow through and started to move up again though.
Okay, Chevron Corporation, just not too long ago, this thing had traded 112, and lo and behold, we're back here at 105.35 on the close, only up slightly in the pre-market. Made a low at 105.03. I really like that level as support, as as long as the SPUs aren't caving in. I would look for a little bounce there. We've had over a 7-point sell-off. Also, you've had just a couple gap downs in that, and this thing usually when it has those couple gap down moves, it kind of sneaks its way back up there to fill those gaps. But to me, it looks pretty well. If it could clear 105.79, Dennis, I really don't see much until the 107 level.
Wow, we've just gapped down, like you said, so quickly. So obviously when you gap down that quickly, you can fill those gaps and move back up quickly as well. I don't know if you're going to get a bounce on this. It's hard to say. The whole sector has been weak. ExxonMobil's held up a little bit better than Chevron has. But really, we've had terrible 3 days here in Chevron. For the last 3 months, pretty muted action. This is 3 pretty significant days where we've been down yesterday. Coming right into this, if you look back there to mid-February, we had a couple of those at 104.59 and 104.80. So I'm going to call this whole area 105 as decent support, just from a whole number theory. We start to take out that low of 104.59. Then it starts to break down again, Joel. So I wouldn't want to be long if we were trading lower than 104.59, but you could give an argument here that we could get a bounce off this 105 area, but below 104.59, then all bets are off.
Okay, moving on to Microsoft, just like IBM yesterday and Apple as well, showing some relative strength in the market, even though the S&P's made a significant new low on the move. Microsoft wasn't able to. 31.79 yesterday's low, 31.74 was Tuesday's low. Another low right above that, 31.82. So this whole 31.80 level is really kind of like the when we made the top up here near 33, consecutive numbers in the same area. So I'll call that major support. Also on the upside, a couple closes around 32. If in fact it can get above and hold 32, you have 3 consecutive highs, 32.09 to 32.15. Let's go with the highest one, 32.15, above that level, and the rally's back on in Microsoft.
Yeah, I think you've given some good numbers there, Joel. Obviously, 31.79 being the low yesterday, it needs to hold on to that. It's trading 31.99, so it's trading just down a half a cent right now. But definitely the stock had some pretty decent relative strength there yesterday. A lot of the tech stocks did. If it can start to break out over that 32.10 area, you're right, maybe the rally comes back on.
A whole cent?
Pardon me, Joel?
You said it was down a half a cent.
I know. I don't know why it's showing down a half a cent. Well, you get these. I've got a settlement of 31.99.5. Do you have that too?
No, they
rounded it up, but there's a settlement I got on 2 different things at 31.995. I hate that, man. You get these half-cent prints on stocks like this, and really we're supposed to be in a penny environment. You get these half-cent off-exchange prints, and you get this funky settlement at 31.995. It looks red on my screen, but it's actually trading flat because 31.995. I'm done with sub pennies.
If I start doing my numbers in 3 decimals, I think my head's going to explode.
No, I know.
Okay, moving on to our NASCAR, Generous Electric. not being so generous here at the $20 level. We talked about the parabolic move that it had above there. It did fake out and settle above there a few times, but just the overall pressure on the market selling off is that caused GE to go down as well. That 20 number is going to be huge again. You even have a gap in there between Thursday's high and Wednesday's low, smack right in between there. So that 20 is going to be hard to get through again. Get a nice bounce off the low 1969. So that's going to be excellent support. Probably bounce around between those two numbers for a few days before we get our next move.
Yeah, you're right, Joel. 1996, the high yesterday. Call that whole area major resistance here now, just even from a psychological perspective. The stock is breaking down. I think you got to be a seller of rallies on this. I think it gets into the 1990s. I think it's going to be met with a host of high-frequency sellers probably. And you know how I love my two-day sell-offs. I wouldn't be surprised that low starts getting taken on 1969. I think it'd start going down in a hurry.
Okay, Procter Gamble does what Procter Gamble does all the time. Four consecutive lows, 66, 86. Stop the break in that thing cold. Rallied up, Dennis. Took out the three previous highs in the 67.45 area. Rallied up nicely to 67.76. That's short of the 52-week high. Kind of settled back in the middle, but it looks like we have this tractor beam play coming back in the side, trying to suck people into that 68 level. Is it gonna hold up today, Dennis, or are we gonna go right back down to 67?
I don't know. You're going to see, like we've talked about for the last month in the stock, that huge seller in the 68 area, and the high frequency guys lean on that, and they've been selling this in the 67.80s and 67.90s. I think they'll still be there, so I think you get up to the 67.80s, 67.90s, you will be met with a host of resistance. But you could have a type of tractor beam play where you get those high frequency guys shorting, getting on the bid right away, and they actually give support to the stock, which can drive the price up to that 68. Above 68, it would be in breakout mode. And just to note, you kind of got this whole sector rotation thing happening again. Risk off, where they're starting to sell some of your commodities, starting to sell some of your financials, and starting to buy some of your defensives. That's what was happening yesterday. And Procter & Gamble had a pretty decent day just because it's a defensive stock.
Okay, AT&T, after making a new 52-week high on Wednesday, 31.97, couldn't get back up to that level. Actually, just traded above the close a little bit, 31.86 high. Sold off 31.56. This whole level, Tuesday's low at 31.51 and 56. That's your major support level. We settled at 71. So the rally's still on in AT&T until we take out this 31.51 level, and then another tractor beam play. You got to respect. Anytime this thing gets over 31.90, probably looking at a fairly low risk short with the size of 32.
You do. The size of 32 is a 52-week high, 31.97. High frequency guys drool when they see stuff like that, and they sell all in the 31.90s. So it gets to 31.90, it runs into a host of resistance above 32. Then those high frequency guys cover, and then all bets are off. And that doesn't necessarily mean it's going to continue to go higher if it takes out the 32. It just means the high frequency players aren't playing it, so the volatility will increase if it takes out the 32. But in the Chevron case, it took out the big number and tanked. So you've just got to be careful. Don't just think because it takes out 32 it's going to break out. Just expect more volatility if it takes out 32.
Okay, J&J kind of continuing its slow leak here. 64.40 low with a 64.46 close. Getting a little boost in the pre-market, Dennis. I expect these resistance right out of the gate at 64.69. That was Thursday's high. If in fact it can take out the 64.40 level, we're getting closer, Dennis. We're getting closer to having a new handle in this stock, either 63 or or 66. It has spent a little time above 66, but not much. But it looks like is there a big bid at 64 to kind of have a reverse tractor beam here?
I don't see anything right now at 64, but it is early. But Overall, the 65.5 area too, Joel, was major resistance for 3 or 4 or 5 days. It tried to get through a little bit of size. It wasn't huge, but it's trying to get through there. It couldn't get through there. Now it's been slowly drifting down. I think you're going to see some of those sellers probably move down to the 65 area now. So if this thing goes into any type of rally mode, it's probably, you're right, it's probably going to be met with a host of resistance. So my new range is 64 to 65. I'm a buyer in the low 64s, seller in the high 64s.
Okay, moving on to our last stock, Pfizer, just kind of hanging on a cliff here, Dennis. Failed miserably at the $22 level. A couple lows here, right at 21.70 and 21.76. If it can't hold that 21.70 level, I expect this thing to slide right back down. Initially have a little breather, 21.62. But if it really goes into soft mode today, I'd be looking for the 10-day low at 21.42.
Starting to look weak there too, Joel. The only thing it does have going for it is a defensive stock as well with a decent dividend. So if we do get into some sector rotation, that could give the stock a lift. But if it gets up into the 21.90s, high frequency guys selling it all over the place up there.
Okay, all right. That's our S&P and Big Ten analysis. We'll be back with our market movers.